It's now my great pleasure to have the opportunity to speak with Gaurav Bhushan. Gaurav is the global CDO for Accor. I'd like to ask him up on stage. We've got about 20 minutes. I hope we'll get a little insight into what Accor's up to, because I think you'll all agree that the journey they've been on for the last 4 or 5 years has been quite remarkable. Gaurav, welcome. I know you've just come in from London from Colombia, I think you said.
That's right.
Via London. So you're going to have to forgive him. He's probably feeling a little sleepy, but I know he's always on his A game. Just give us a sense, if you will, of where you think Accor is at the moment in terms of what I might call the grand plan that Sebastian has underway. Are you sort of halfway through the journey, 3/4 of the way the journey? How would you characterize where you are at the moment, sort of from a global perspective?
Sure. I think it will be fair to say, sorry, can you all hear me okay? I think it would be fair to say that we've probably had more change in Accor in the last 5 years than in the previous 45 years of the company. It's been a dramatic turnaround. We've gone from being an asset-heavy, mid-scale economy European player to being now a truly global company, 5,000 hotels, another 1,100 hotels in the pipeline. About 40 to 50% of our business now is in luxury and premium hotels, operating in 100 countries. So it's been a dramatic change. The brand portfolio has gone from about 10 brands to almost 40 brands now. So it has been a dramatic transformation, and we have gone from being quite asset heavy to being almost entirely asset light, being a service provider, which is what our investors, the financial markets, want us to be. So we've been quite carefully charting that transformation into what we think we should be. And I would say we're probably 85% of the way there. This year is an important year because we're at the fag end of our disposals, the asset-heavy disposals. We're working on the disposal of our Eastern European real estate platform, restructuring some of the leases that we have. That'll actually free up well over €1 billion of cash on the balance sheet, puts us even in a better place to take advantage of investment opportunities as they arise. So, financially, the company's been never been stronger. Great balance sheet. We have strong growth. We're almost opening a hotel every day. So we have strong growth, good balance sheet, good momentum. So it's a good time to be in Accor.
Yeah, it sounds remarkable. 38 brands, I think, is the number I heard yesterday from Mark. I mean, is that sort of, how do you characterize this sort of drive for brands? I mean, you're obviously 8 ahead of Marriott at the moment. Do you see this as a sort of continuation, and do you think it's now as important to your shareholders as pipeline historically was? You've got to just keep showing that you've got the sort of bandwidth to keep adding in markets where you're already present. Is that really the sort of driver? Is it you need to just have more choice? And is that consumer driven or shareholder driven? Or is there a concern that growth may actually be a little bit finite in some markets?
For me, no question it's consumer driven. It has to be consumer driven. You've got to follow the customer. And I think if you take a step back and look at what's happened in our business, in our industry over the last 10, 20 years, the quality of information that is available to our guests, our clients, when they're booking, making choices, it's just amazing. It's multiple times what it used to be before. So they know exactly what they're looking for, and they're veering very clearly to experiences. And it doesn't matter whether you're in the economy segment or the luxury segment, people want a certain style of experience no matter what level of accommodation they're looking for. And that can vary from customer to customer. In a lot of the mature markets, the market is segmented significantly. You've got sub-segments within segments, and that's where the customer is headed. So all we're trying to do is understand very carefully what our customers are looking for, and make sure we have a brand portfolio that matches what the customers are looking for. So you can take two approaches. You can have less brands, but you can stretch the hell out of a brand and make it a basket and try to put everything in it and scale it up. Or you can have more brands, but make sure that brand stands for something that's quite consistent, right? And consistent doesn't mean that it has to look the same everywhere. Consistent is a quality of experience and a style of service, right? So we've chosen to go for this approach, but we choose to then back all these brands with one single point of distribution, which is our new loyalty program called Accor Live Limitless. We're putting a few $100 million behind that program because we believe it's absolutely fundamental to what we do. So the idea, the Accor strategy, is to have really a portfolio of brands that customers can identify with, but make it quite efficient for our owners and partners to have one single point of entry that drives a real scale in distribution and loyalty. So we have a strong brand, and we're also a strong traffic provider, because you need both. One is no good without the other.
So just picking up on the distribution story and the model, the business model side, which you're just talking about there. So we're obviously all conscious of what's just happened with Thomas Cook. A lot of, what the outside world is looking at from a consumer perspective, it's obviously a disaster. But, from a business perspective, all of us in the room know that there was something probably a bit challenged about that business model. How do you look at that distribution side of things, which obviously is so important to your owners and so important in their decision making, when you've got the likes of Google and Amazon and other players sort of hovering out there? How nervous does that make you when you're sitting in Paris talking about where you're going to be in 5-10 years from now?
Obviously, we look at that very carefully. It is probably top of mind at the moment. And there's no question that what you see today will be different in 6 months and will be different again in 12 months. I personally think it's a matter of time before the likes of Amazon and others will be in the hospitality business. It's the second largest industry in the world. It would be illogical for them not to be in this business at some point in time. Google's already there, and they will continue to make advances in that. So the way product is distributed is going to be disrupted and will change constantly. What we're focused on is two things: having strong brands and having customer retention, right? That is the key, because the first time a customer books, they could book from a few hundred channels. But we need to make sure when they come into our hotels, they always come back and book with us, because that's the link we have with the customer. The difference between what we do, because our model is primarily a operating model. 70% of our network is operated, so we focus on getting that relationship going with the customer, and no matter how big Google or Amazon will get, they'll never have that direct contact, that human interface with the customer. And that's the game we've got to win, and we're putting a lot of time, effort, money, and resources behind that, because that has to be a huge value proposition to our owners. That's how we create traffic.
And do you think do your shareholders share that view, that you can win this? Because it's effectively a battle, right? You're in a bit of a war here for that customer loyalty. Accor and Amazon know that if they can get that angle, that they have a potentially winning proposition. I mean, the OTAs already, we all know the stats. The market cap of the OTAs dwarfs that of the entire hotel industry. So the market's basically saying, we like this model, and we think it's sustainable. We're sort of building systems and infrastructure because we allowed that to we seeded that ground, and now we're trying to regain it. Do you think you can win this loyalty battle?
I don't see that as a war necessarily, because we work very closely with the OTAs. I think what we're trying to do is focus on retention. The OTAs focus their entire business on acquisition, and obviously they're now moving into the retention game. But in the end, they need us too, because they need content. We're the content provider, right? So we obviously use our scale to have the right deals, the right partnerships, the right relationships with the traffic providers, like the OLTs or the meta searches, but it's not a war because we have to work with each other. We can't do without them because they do provide a lot of traffic, and they need the 5,000 plus hotels that we have to offer all around the world.
So you ultimately see this as more symbiotic.
And most importantly, the size of the market is growing. I mean, the tourism industry is a growth industry. It's been growing steadily at 3 to 5% for the last 20 years. It'll grow at another 3 to 5% for the next 20 years. I mean, there's now 1.4 billion travelers worldwide. That was 300 million in the 80s. It'll be 2 billion in the next 10 years. So the size of the market continues to grow. The good news is we're in a growth industry, so the size of the pie is expanding. Now it's a matter of how each of these organizations, us included, see what is their business model. And we see our business model focused on brand management, hotel management, and customer retention and customer loyalty. That's what we think we can be best in class at.
So let's just pick up on something that you mentioned there, the sort of the huge growth in travel, and you know, we're all aware of the stats. Turning to Africa, obviously, we're here in Africa. The stats are quite extraordinary when you look at the data points, whether it's infrastructure, growth in population, job opportunity, you know, it's endless. Where does Africa fit in Accor's global strategy? How important do you see Africa, and you know, where do you see Accor going in the next 3, 5, 10 years in Africa?
I mean, Africa is very important. You know, we as a company are focused on being a leader in pretty much all the markets outside of the US. That's our position today. We intend to keep it and aggressively expand that, right? It is the core of what we do. So Middle East and Africa, Europe, Asia Pacific, South America, these are all core markets to us. We have leadership position in these markets. Now, for us, Africa is hugely important. Our network and pipeline is a bit skewed at the moment because 70%, we have about just over 150 hotels here, 25,000 keys, but 70% of that is in North Africa. So we're very, very strong in North Africa. Like to be a lot stronger in East Africa and South Africa. So we are focused on balancing our presence, lifting our presence here, and a couple of initiatives that we've put in place together with a whole new team that is now based out of Joburg should be able to drive that initiative. As you know, we've partnered with our friends from QIA and Qatar Hospitality. Kamal's here. Great partners, friends and partners of Accor. So we've teamed up together to do the Qatar Hospitality Fund. We have what I think is a best-in-class team led by Olivier Granet and David Demiba. So that is an initiative at a scale that I don't think Africa has seen before, and that is putting your money where your mouth is. We truly believe in the future of Africa, our future in this continent, and we're putting our money where our mouth is, together with a very, very key partner, and building out this network over the long term. We've also partnered with Mantis, which has been an excellent partnership for us. We did that last year. It goes extremely well. The network is expanding. We get enormous visibility, a lot of benefit from being associated with an innovative company like Mantis. So we are looking at how we expand not just organically with our brands, but also take these strategic initiatives to make sure that we can consolidate our presence and really set a long-term platform, because we're not a private equity fund. We don't come in and out of markets, and we're not a seller of our business. We're here for decades. We have been here for decades. So we're trying to build platforms that sustain long-term growth for Accor.
And how have you found the reaction so far to the fund, and what sort of deal flow are you seeing from your desk?
I mean, the deal flow is very, very active. I think, Olivier, I think, was on stage yesterday. We were catching up when I came in yesterday. They are extremely active. There is really a need for sensible, patient, logical capital for hotels in this market. Unquestionably, that's why we're there. And so if there is credible capital on the table, you will see a lot of opportunities flow through. So now we need to focus on what are the right opportunities, and we have what I think is the best-in-class team to do that for us.
So obviously sub-Saharan Africa, a principal focus. In terms of where you see the most opportunity, where does Ethiopia fit in that? Because obviously, in many ways, and those of us who have been coming here, we've already seen a transformation in the last 5 years.
Yeah.
It's a country that's relatively underpenetrated. We heard this morning from several of the panelists this morning, once you're outside Addis, there's basically no penetration to speak of. And yet we've got a country of 100 million people and huge range of attractions. I mean, how do you see Mantis, for instance, working in a place like Ethiopia? When you've got places like Aksum, Gondar, Harar, the Simeon Mountains, the Danakil, it looks like fertile ground to me.
Absolutely, which is why the combination of working with a company like Mantis, growing the ecotourism, the adventure tourism business, together with what is more conventional tourism and hospitality in the tier 1, tier 2 cities, works well. We have a two-pronged strategy to go for both because there's a great opportunity in both sides. There are two very different sides of Africa. So for us, absolutely, Ethiopia's got huge potential. It's 100 million people. There's, if you look at sub-Saharan Africa, I don't have the stats for Ethiopia specifically, but there's less than 0.4 hotels per 1,000 inhabitants in sub-Saharan Africa compared to even, say, Asia, which is 1.5. There's a long way to grow, and when you go to the developed markets, it's almost 10 hotels per 1,000 inhabitants. So the size of the market is huge. But you've got to be very careful. Everyone looks at these macro statistic numbers and goes, that's big. But you've also got to be mindful of the pitfalls that come with it. And we have been for 50 years in emerging markets, so we understand how to work our way through. We're flexible, we're practical, we're pragmatic, and you need to have that approach. We're a big company, but we have, I think, the pragmatism of what it takes to work our way through the pitfalls that typically happen in these markets. But no question the opportunity in sub-Saharan Africa, in Ethiopia, in Kenya, in Nigeria, Tanzania, is huge, and we really want to capitalize on that. We've proved our track record in North Africa. We have a very successful business there. We created a listed company in Morocco. So we, over a period of time, have, through a series of partnerships, joint ventures, relationships, managed to create a fairly successful business. And that culture of creating relationships and partnerships is what I think is crucial in this market to drive a long-term business. Because if you think you can come and do it all by yourself, no matter how big you are, you're sadly mistaken. It's not going to happen. You've got to create, I think, the relationships on the ground, which is what we're trying to do. We've moved our team. Our entire team was in Casablanca. We've now created a whole new team in Joburg. We've obviously got the Casada team now in Joburg as well. So it's about putting people on the ground because you build relationships on the ground. This is a very local business, and we're not going to do that sitting in Paris.
Fair enough. Well, unfortunately, we've come to the end of this. We've only got 20 minutes with Gaurav, and we've got to keep to time. But Gaurav, in summary, very positive on Africa. You think this is, you talk, I think, importantly about patient capital. There's probably nowhere else in the world that you have to be as patient as Africa. So, we've heard from Olivia yesterday. We've heard from Mark yesterday. It sounds like you guys are sort of lining it all up, and we wish you all the success, and we'll see how it plays out. We're seeing Olivia in a year's time, and yourself, hopefully, so we'll get to see what you guys have done in the interim. But in the meantime, if the audience could just thank Gaurav for being here with us today. Many thanks.
And thank you, Nick.
Thanks, my friend.
As always, Nick, that's a great session. He's one of our favorite moderators to use at Bench Events. He's like part of the team, Nick.